You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning. Today is Thursday, July 5th, 2018. This is your Options News Rundown. Our first story today is from investing.com. It's the top 5 things to know in the market on Thursday. First thing to know is Europe gets a boost as Trump offers 0 tariffs on autos. The U.S. ambassador to Germany has told German car bosses that President Donald Trump would suspend threats to impose tariffs on cars imported from the European Union if the bloc lifted duties on U.S. cars, the German newspaper reported. Handelsblatt said Ambassador Richard Grenell told executives from Daimler, Volkswagen, and BMW during a meeting which took place at the U.S. Embassy in Berlin on Wednesday that in exchange, Trump wanted the EU to annul duties on U.S. cars imported to the bloc. Trump threatened last month to impose a 20% import tariff on all U.S. assembled vehicles, which could suspend the industry's current business model for selling cars in the U.S. European stocks were higher, with Germany's auto-heavy DAX, which has been the most sensitive to trade tensions, managed a 1.2% gain. Second thing to know is China stocks slide on to a 2-year low on the eve of U.S. tariff deadline. Chinese shares led losses in Asia, with financial markets in the region jittery before a U.S. deadline to impose tariffs on Chinese imports just a day away. The Shanghai Composite closed down 0.9%, marking its third straight losing session, while the tech-heavy China Shenzhen Chi-Next Composite fell 2.2% after logging a 2.6% decline on Wednesday. Markets are on the edge ahead of Friday, when you have tariffs on $34 billion worth of Chinese products and retaliatory Chinese tariffs on U.S. goods of the same value are expected to kick in. Due to the time difference, duties imposed by Beijing would likely take effect before Washington's tariffs on Friday. China's finance ministry, however, said that it will absolutely not fire the first shot in this trade spat with the U.S. The third thing to know is Dow futures rise 150 points. Wall Street futures point to solid opening bell gains as hopes over a softening in U.S. trade rhetoric lifted sentiment among traders returning from the 4th of July holiday. Fourth thing to know, Fed minutes and U.S. data are on tap. Investors are awaiting the publication of minutes from the Federal Reserve's June meeting at 2 p.m. Eastern for further clues into the outlook on monetary policy. The U.S. Central Bank raised interest rates as widely expected following its meeting on June 13, its second rate increase of the year, and took a slightly more hawkish policy tone in signaling 2 additional rate hikes by year-end. Besides the Fed, market players will also focus on a fresh batch of U.S. economic data to gauge the health of the world's largest economy. The highlight of Thursday's economic calendar will be the ADP jobs report for June at 8:15 a.m. Eastern, which is often seen as a warm-up act for the big Friday government non-farm payrolls report. An ISM survey on service sector activity is due at 10 a.m. Eastern. The fifth thing to note today, Trump turns up pressure on OPEC and EIA data is ahead. Oil prices eased slightly after U.S. President Donald Trump sent a tweet urging OPEC to reduce prices for crude. Trump late on Wednesday said the Organization of Petroleum Exporting Countries producer cartel, which is OPEC, was driving up fuel prices. Meanwhile, supply data from the Energy Information Administration will be released at 11 a.m. Eastern. That's a day later than usual because of Wednesday's Independence Day holiday, amid forecasts for an oil stock drop of 5.2 million barrels. Our second story today is from investing.com. IBM wins a $740 million contract for blockchain tech services to the Australian government. U.S. tech giant IBM has signed a $1 billion agreement. That's Australian dollars, which comes out to $740 US, with the Australian government to provide blockchain-related technological support over the next 5 years. Harriet Green, head of IBM Asia Pacific, told Bloomberg that under the contract, the U.S. company will offer services related to blockchain and automation to federal departments such as Home Affairs and Defense. She added that the implementation of emerging technologies would support the employment. IBM will also come up with updated platforms to securely store citizens' data. The Australian government estimated that the partnership would result in a 100 million Australian dollars in savings to taxpayers. Our next story is from NASDAQ.com. Ford says no plans to hike China prices despite new tariffs. Ford Motor Company said it has no plans for now to hike prices of imported Ford and Lincoln models in China, despite additional tariffs on U.S. vehicles due to be applied from Friday. The U.S. car maker, which has been facing sluggish sales in the world's largest auto market, said in a statement on Tuesday it has no current plans to increase the manufacturer's suggested retail price, MSRP, on its import line in China. Ford's move, which would mean taking a hit on margins on imported cars, makes it the first foreign automaker to address pricing issues ahead of the new tariffs that will affect around $34 billion of U.S. imports, from soybeans to cars to lobsters. China, which just days ago cut tariffs on all imported automobiles, plans to slap an additional 25% levy on 545 American products, including U.S.-made cars, should the Trump administration go ahead with plans to implement tariffs on $34 billion of Chinese imports from July 6th. Our final story today is from CNBC.com. Private sector payrolls miss expectations as companies can't find enough people to hire. Private payrolls grew at a disappointing rate last month as businesses struggled to find enough new hires, ADP and Moody's Analytics said Thursday. Jobs in the U.S. grew by 177,000 in June, the report said, while economists polled by Thomson Reuters expected a gain of 190,000. June also marked the fourth straight month of jobs growth below 200,000. Jobs growth for the previous month, however, was revised up by 11,000 to 189,000. And that, ladies and gentlemen, is News You Can Use for today, July 5th, 2018. Your Options News Rundown. I'm Dan Passarelli, Trade Smart, and have a great day.
Thank you for listening to the Options News Rundown. To learn more about these stories or any other developments from the world of options, visit www.theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.